Coinbase is suspending Binance USD stablecoin. In a tweet, they're saying that it doesn't meet listing standards. Emily, you've been watching Binance. They've been in the news quite a bit with questions about their reserves, particularly behind BUSD, their native token.
Yes, Binance is most certainly in the news. I think there's been a lot of questions about them and BUSD in particular, because this follows Paxos's announcement that it will stop minting new Binance USD tokens at the direction of the New York Department of Financial Services. So joining us to discuss this for more is Ram Ahluwalia, CEO and founder of investment advisor Lumida. Welcome, Ram.
Thanks for having me.
Well, welcome back, Ram, I should say. So, there's been a lot of news about Binance BUSD. Let's just start with the Coinbase thing. I'm just curious, we don't have that much information about it. What do you think of it? What are the implications? I'm just curious to get your reaction to it.
Sure. So Coinbase, of course, as you reported, dropped stablecoin BUSD from its platform. Coinbase would be required to drop any token that the SEC considers a security, unless Coinbase wants to litigate the SEC. We also know from Coinbase's most recent quarterly filing that they did receive a subpoena from the SEC on a scope of activities, including their stablecoin offerings. So my interpretation of that is that the SEC's indicated to Coinbase that BUSD may be a security, and that, for all intents and purposes, would force Coinbase to delist that.
Didn't Coinbase say something in their announcement, though, about how this was based on their internal investigation, or didn't they use some sort of wording like that?
Yes, they did. They did say that. They said that it did not meet their standards. They were not specific as to what standards were applied. Coinbase applies a 5-point standard to measure whether any token is a security or not. So we have to read between the lines. My interpretation is that they have some kind of indication from the SEC that it may be a security, and they therefore are going to delist it.
So just to kind of untangle this further, because it's kind of confusing, right? The controversy about this is probably not about BUSD specifically. It's more about sort of the wrapped BUSD, right? I mean, BUSD in and of itself is supposed to be a one-to-one stablecoin that's issued by Paxos, that's regulated by DFS, right? So do you think this is actually about BUSD itself, or is it about more what happens to BUSD once it gets sort of out into the wild and Binance wraps it or whatever? I mean, can you untangle this a bit?
Yeah, it's an excellent question. So first off, there's Paxos issued BUSD, which is dollar-backed, and Paxos has public reporting and audit and all sorts of attestations and transparency into the reserves. So Paxos issued BUSD is secure. However, Binance also has other forms of stablecoins that are pegged to BUSD that are not subject to the same transparency and reporting standards. That's one point to call out there. The second is, well, what is the SEC trying to do here? And what are the regulators trying to do? And why are the regulators, at least thus far, focused on BUSD and not other stablecoins like USDC? There's an article that Nick Carter published called Operation Choke Point 2.0. And his interpretation is that the regulators are trying to reduce fiat ramps to make it more difficult for money to move into the crypto sector. I have a different take. I respect the analysis, but I have a different take. I believe the regulators are focused on limiting fiat ramps and trying to control exposure to Binance. And BUSD is one way to do that. And the SEC can allege that BUSD is an unlicensed money market. It's a money market that pays a 0% interest rate. That would be the argument that they make. So that's our best guess of how to explain what the SEC is doing here. And of course, it's causing a quasi-run on the bank for BUSD. You've seen a significant amount of redemptions.
So a couple of things that stuck out to me, and that is, I mean, it seems as if the SEC is pretty much very close to calling every crypto that isn't Bitcoin a security, or, it seems to have that leaning, yet BUSD itself was singled out as a potential security. Do you think that they're kind of looking at just kind of the other coins that they trade? How threatened are they? And then second of all, USDT, it has in the past been accused of kind of the same things. They do print attestations, not attestations. They have attestations. They don't have audits. They have a daily balances that they show live. And as far as their claims are, their balance sheets show that they have gotten out of the commercial paper business, it seems. Nonetheless, there were always these questions swirling around USDT. Is that the next thing to fall as well?
Yeah, great question. So first off, for both Binance's own pegged stablecoins and for Tether, we do not yet have independent third-party audit and reporting. We also don't have the proof of assets and proof of liabilities. That's what you need to have to create public confidence. And to your point on Tether, the New York DFS a few years ago fined Tether, and this is all public, of course, and one of the items that the New York DFS cited was that Tether did not have sufficient reserves, and there was a $17 million fine, right? So why is the SEC focused on BUSD? And to your earlier question around their hinting that the broad, not even hinting, Chair Gensler has been saying that the vast majority of these tokens are securities. I do believe that they're attempting to prioritize, and they're trying to distinguish between higher risk tokens that could pose a risk of loss to retail investors, and they're zeroing in on Binance and BUSD. Now, CoinDesk reported a few months ago that the DOJ was considering AML enforcement actions on Binance, but the DOJ did not, because they did not want to cause harm to retail investors. So this is the hornet's nest, a thorn of issues at work. So I think what they're doing is they're trying to contain BUSD. They have concerns around AML, and they're raising the fences around Binance, and they're being targeted. The regulators, I do not believe, are trying to kill crypto. They are sensitive to avoiding damage to retail investors. They're trying to be targeted. If Chair Gensler wanted to kill crypto, all he has to do is say ETH is a security, and Coinbase would be forced to delist it. He could then create another list and say these other tokens are securities, and Coinbase would be forced to delist it or litigate. I believe they're trying to triage and target.
Ram, I was hoping you could also address, not only regulators, but there is information that some journalists have been writing about, publishing, and Forbes has just come out with an article basically suggesting that Binance is potentially commingling funds. They're backing BUSD one for one, but they're using those funds for other undisclosed purposes, sending that money to Alameda Research in the past, as well as Amber Group and other hedge funds and exchanges. And we're also learning CZ, the CEO of Binance, is tweeting this morning that, that's just funds that are being withdrawn by those entities, nothing more. What's your thought process and reaction to these interactions?
It's an excellent question. Well, first off, just briefly on the stablecoin, then I'll come to this. What the SEC needs to do is issue interpretive guidance so people have clear rules in the road and they don't have to guess how the SEC is going to interpret is something a stablecoin or not. That's one. So this is this Forbes reporting. If we have to rely on that, it is concerning. And to your point, again, Paxos issued BUSD is fully reserved. However, Binance has other pegged stablecoins, and the reporting claims that Binance has taken the proceeds of the issuance of those pegged stablecoins and created loans. Now, there's a name for that. That's called rehypothecation. That's what banks do. When a bank takes your deposit and then they go make a loan to someone else. And what we've seen over the last 12 months is the demise of other institutions that engaged in rehypothecation or lending out customers' deposits, including Voyager, Celsius, BlockFi, and Genesis. So it's very concerning to see that. And additionally, you're also seeing references to counterparties that created serious issues for Genesis, such as Alameda. So this is an important topic to really dig into. All we can rely on is this Forbes report and then CZ's claim. But it is concerning because up until now, I did not see any evidence that Binance was engaged in offering loans. And the simple way to understand whether a centralized exchange had real risk was to ask yourself, did they offer loans? Because if you offered loans and they were unsecured, then you had impairments and write-downs. So this is the first reveal or reporting that Binance issued loans. So we need to focus and learn a lot more around how many loans were issued, what's the size of the loans, who are the counterparties, are those loans performing, how are those loans being funded? And here's another thing, back to the SEC issue. If Binance issued a peg stablecoin and took the proceeds to go fund investments, then most certainly those are securities. Why? Because Binance is raising money from the public and then making investments with that in the form of loans, except they're paying 0% to the public, but taking risk with that. And that may be something the SEC has looked at. We don't know. We're just interpreting and making conclusions based on public reporting.
All right. Ram, we got to wrap it there. Interesting analysis, though. We'll just quickly mention that Genesis and CoinDesk are both owned by Digital Currency Group, our parent company. That was Lumida CEO and co-founder Ram Ahluwalia.